If you're watching this right now, you are early. The next major move in silver isn't coming from the market, it's coming from central banks. And when it happens, it will shock almost everyone. We're approaching a moment where the Federal Reserve, the ECB, and other major central banks are completely cornered. Their next monetary policy decision could send silver exploding toward levels most people still think are impossible. I'm talking about a scenario where the Fed is forced back into money printing, forced into emergency liquidity measures. And when that happens, silver doesn't just crawl higher, it jumps. Some analysts are already saying if the Fed even hints at new QE, silver won't stop at $50 or $70. It will accelerate straight toward triple digits. This isn't just hype. This is math, pressure, and policy all colliding at the same time. Now, before we go any further, if you care about real assets, sound money, and understanding what central banks are really doing behind the scenes, hit that like button and subscribe right now. It helps this channel massively, and it tells YouTube to show this video to more people who need to hear it. Here on Silver Shockwave, we don't just chase headlines, we break down the forces driving them. And what you're about to hear is one of the most important silver narratives of this decade. Let's start with the Fed, because everything flows from there. For over a year, the Federal Reserve has tried to convince markets that inflation is under control and that higher rates can stay in place without breaking anything. But beneath that calm messaging, the system is cracking. Government debt is exploding. Interest costs are spiraling. Banks are sitting on huge unrealized losses, and global liquidity is quietly drying up. The Fed knows this. They won't say it openly, but every policy meeting now is a balancing act between maintaining credibility and preventing a full-blown financial accident. And history tells us very clearly what central banks do when that balance fails. They print. When the Fed prints, it doesn't just weaken the dollar. It destroys confidence in paper promises. And silver, more than almost any other asset, responds violently to that loss of confidence. Silver is not just an industrial metal. It's a monetary metal that has been suppressed through paper markets for decades. Futures contracts, unallocated accounts, ETFs backed by promises instead of metal. All of that only works as long as people trust the system. The moment central banks signal they've lost control, that trust evaporates fast. Now let's talk about Basel III, because this is something the mainstream media completely ignores. Basel III quietly changed the rules for precious metals, especially gold and indirectly silver. Under these new rules, unallocated precious metals are treated as riskier assets, while physical, listed metal is treated far more favorably on bank balance sheets. In simple terms, paper silver became less attractive, and real silver became more valuable. This doesn't cause fireworks overnight, but it creates a slow building pressure, the kind that builds silently until something finally snaps. Banks and institutions have been leaning on paper silver to keep prices contained for years. But Basel III made that game much harder to play. Add in rising industrial demand from solar panels, electronics, EVs, and defense, and suddenly there's just not enough physical silver to support the massive mountain of paper claims. This is why you keep hearing about tight supply, delayed deliveries, and shrinking inventories. It's not a coincidence. It's the result of policy decisions colliding head-on with physical reality. Now imagine this entire setup colliding with a Fed pivot. Picture the Fed announcing renewed QE, or even just signaling rate cuts, because something breaks in the credit markets or the bond market seizes up. The dollar weakens instantly. Real yields collapse. Investors rush for hard assets. Gold moves first, but silver doesn't just follow, it sprints. Historically, silver always lags gold at the beginning of a monetary easing cycle, and then it dramatically outperforms it. That's when you see those explosive moves, the kind that make headlines and leave everyone scrambling to catch up. This is exactly where those $100, $112, even $150 silver scenarios come from. Not because someone just woke up feeling bullish one morning, but because the math breaks. The paper-to-physical ratio becomes impossible to maintain. The moment enough players demand physical delivery instead of rolling their contracts, the system faces a choice: settle in cash, or reprice silver much, much higher to shake out demand. And history suggests they'll choose repricing. And here's the part most people miss. Central banks need to announce massive QE for this to start. All it takes is a subtle shift in their language, a hint of accommodation, promise of liquidity if needed. Markets are forward-looking. Silver doesn't wait for confirmation, it moves on expectation. By the time QE is officially announced, the biggest gains are often already underway. Globally, the picture is even more unstable. Europe is dealing with stagnation and debt. Japan is trapped in yield curve control with no exit. Emerging markets are choking on dollar-denominated debt. If the Fed stays tight, something breaks overseas. The Fed eases, inflation reignites. Their path weakens confidence in fiat currencies. That's the environment where silver truly thrives. This is why we keep seeing central banks quietly accumulating real assets, while publicly dismissing precious metals. It's why official narratives downplay silver while industrial users scramble to secure long-term supply. That's why investors who wait for confirmation usually end up buying much higher. As we get closer to the next major policy shift, volatility will increase. You'll see sudden spikes, aggressive pullbacks, and non-stop media confusion. That's intentional. Confusion keeps people on the sidelines, but underneath all that noise, the trend is forming. Monetary expansion, currency debasement, and physical scarcity are all pointing in the same direction. Now I want to hear from you. You think the Fed can actually hold rates high without breaking something? Or do you believe more QE is inevitable? Drop your thoughts in the comments below. I read as many as I can, and your perspective helps this community stay sharp. And if you found value in this breakdown, share this video with someone who still thinks silver is just another metal. They might thank you for it later, because when central banks lose control, silver doesn't ask for permission, it reprices. And when it does, the move is fast, emotional, and unforgiving to anyone left on the sidelines. Stay alert, stay informed, and stay ahead of the shockwave.